Hi everyone, welcome back to Be Rich and good evening. Today I wanted to talk about a company which is very interesting. Talking about the S&P 500, we have different sectors which are covered in the S&P 500. And when you look at it in terms of weightage, IT stocks is 31% of S&P 500, finance is 14, healthcare is 11, discretionary consumer products around 10, communications is 9, industrial companies are around 7.5, consumer staples that's 6, energy is 4, and utilities is 3, and real estate is 2. And this company alone, right, is 0.6 percentage. This company is such a great company that Warren Buffett invested it in 1988, and he owns 9.3% of this company, which is around $28 billion. He owns 400 million shares. He started, like I said, investing in 1988. The revenue from the dividends, he makes around $776 million a year from this company. That's almost $25 a second. By the time this video ends, he would have made another $14,760 just in terms of dividends from this company. What is this company I'm talking about, which was founded in 1886, which went public in 1919 and has 200 brands worldwide? Of course, I'm talking about Coca-Cola. Coca-Cola is a great company, and today I thought we will deep dive into that and see, is it a company which you should be looking at? And if you should be looking at it, is it at a price point you should be looking at? Is it cheap? Is it expensive? If you look at their quarter one, what they've done is so far this year, that is, they've done $11.1 billion in revenue, which is a 2% decline year on year. But they've managed to do well in organic sales, and there they've recuperated by increasing that by 6%. So the earnings by share is up by 5% and sits at $0.77. That's 77 cents, is what their EPS stands today. Performance, which if you see sectorially where they've done in their products, there's zero sugar drinks. These, of course, have given a 14% volume growth across all sectors globally. That means all geographies. If you take Asia, Europe, South America, US, they've had like a 14% growth in volume. The unit case volume has grown by 2%. That means increase in demand in India, China, and Brazil have constituted most of that unit case volume. But North America saw a decline of 3%, and this was offset by 8% increase in pricing. This is a moat which Buffett always talks about. The brand which Coca-Cola has, right? Their brand is so old and people have such a recall to it and people are so addicted to it that the company can even raise the price a little bit. Consumers are willing to pay. So that is the strength, and they've shown it through recovering some of their decline in sales by increasing their pricing. In terms of finance, they've been very consistent in the last 10 years with stable earnings and in growth. Their free cash flow is strong as expected, and they've been making strategic investments looking long term. The debt to equity ratio is where a value investor might raise flags for a regular company, but it's not a regular company because their debt to equity is at 1.86, meaning they're very heavily in debt. Interest rates coverage is where you find the assurance that they can manage their debt well, because earnings before interest and tax, they're able to cover their interest expenses by almost 28 times, which is great. Of course, the red flags, if you look at it purely as a value investing, you would say their high debt levels are of concern. And the currency headwinds they've been having thanks to Trump doing all what he's doing with the tariffs and what he's doing with the Fed, fighting with them has led to a lot of headwinds. That means the fluctuation dollar has not helped them because their revenue, which comes from outside the US, gets affected when these things happen. So that is another thing investors should keep an eye on. In terms of valuation, if you look at the company, their PE ratio stands at 28, which is considered to be a premium, and the price to earnings compared to growth is at 5.86. 5.86 means it is looking overvalued when compared to what its growth in earnings is. Price to book is at 11.76, which means it's at a high premium. The investors are flocking to this stock and they don't mind paying a high premium. That explains why the price to book is at 11.76. The dividend has been very consistent over the last decade at 2.89% right now. if you look at it purely in terms of value lens, and you're very strict on this, then of course you would say the company does look expensive right now. Expensive because what do you call it? The DCF, discounted cash flow method of calculating, would peg this around $47 to $48, and the relative value is at 65. So if you take an average of those two, the intrinsic value is placed around $56, and the current price is at $71.61. The last time when it came to this, close to this value, was in October 16th, 2023, when the price of a share of Coca-Cola dropped all the way down to $51. So now is where I want to ask you, is it a value? Should you be buying this share or not? There are certain things you can look at. Looking at the current debt to free cash flow, they're very highly in debt. They're around $48 billion in debt. But the free cash flow and the cash reserves suggest that they are handling their debt very well. The capital structure, if you look at it, that also shows a lot of investor confidence, though they have a lot of debt. Majority of their revenue has been coming from concentrates. Concentrates is the formula of Coca-Cola, which they're sending worldwide. That means they're not relying on bottling it themselves. They're able to create a strong network of people who are bottling and distributing for them, and they're taking a lot of money from that. So if you see, their sales and concentration is where a lot of their revenue comes from. US, if you see, is their largest geography. Most of the revenue comes from US, but they're very well diversified if you see all the other sectors which they are present in. Net margin is at around 23 to 25%, which is really, really healthy. So, and they have predictable profits when you look at the graph. So I've given you a lot of information. So would you be buying Coca-Cola at this price? Do you think $71 is a fair price for Coca-Cola today? And would you buy Coca-Cola today? Or would you wait for a correction to come and then consider Coca-Cola? Because there's no doubt, looking at the strength of the brand and the longevity of the brand and how well it's been paid dividend, even Warren Buffett has been owning the stock since 1988, shows you how long he's been behind this brand, and it's a trusted brand of his. And what would you say to saying for this brand? Do you think it is stock which should be bought at this current price? Or would you say PepsiCo, which is the strongest competitor to Coca-Cola globally and in America, which is priced now at $131 a share, do you think that is a better option than Coke? Are you a Pepsi person or are you a Coke person? I'm curious, so let me know below. Would you buy Coca-Cola or would you buy Pepsi as a value investor? Forget what it is in terms of drinking. Would you rather drink Pepsi or Coke? But would you rather invest in Coca-Cola or Pepsi? And I would like to know what is your reason why you think this is better than other. And tomorrow I'll take a deep dive into Pepsi, and we'll walk through Pepsi's moat, and we'll talk about Pepsi's numbers, where their discounted cash flow is telling us their price should be and what their relative value is. And we'll reach some intrinsic values over there and see if Pepsi is currently undervalued by the American market, or if it is overvalued like what Coke is being said. Or are we looking at it completely wrong? And should we look at a different way of discounting? A different amount should we be discounting in the discounted cash flow method, which will take us to a much higher valuation of Coke and showing that Coke is actually undervalued. These are things which I want you to think about, and tell me what you think about. So thanks for watching the video. I hope you enjoyed this short video which I did today on Coca-Cola. It's a well-known brand. It's well spoken about. So other than where they are right now, there is nothing much to talk about in terms of history. So that's why I spend most of the video talking about where they are currently in terms of earnings, in terms of financials, and in terms of where they are placed in the market, and do we see value right now. Other than that, most of the rest of the history of Coca-Cola, I'm sure most of you know about it. And Warren Buffett stories behind Coke. We have done numerous videos on this channel, on our sister channels with Anand on this. So I just wanted to quickly jump into this and say, you see value in Coca-Cola today or not. Thanks for watching the video. I hope you had a wonderful day and you have a wonderful evening. See you again tomorrow when I try to talk about Pepsi as we get into the weekend. Thanks for watching Bearish today, and good night.